All right, welcome back. Still watching Markets Radar. Best time to set stage on what to watch out for in the session. Aside of the headline numbers on the Nifty and the Sensex, stocks will be in focus as they have been over the last couple of...
Paras Aiden also Johnson from our studio. Paras, many thanks for joining in. What's your own sense? Positive bias, or would you be circumspect? And based on that, are you looking to initiate fresh longs, or would you stay out for the time being?
Well, it looks like the markets are temporarily in an overbought zone. And when I use this word overbought, it's especially for those who have a very short-term horizon. Over the long term, absolutely no problem. I think you like the stock, you like the valuations, you like the expected growth over the next 1 year at least, if not more, just go ahead and buy them.
Right, Paras, let's start off with your picks this morning because we've seen a lot of stock-specific activity. Of course, in the last session, sugar stocks and metal stocks have picked up as far as rollovers go. But what are the stocks that you are recommending a buy on?
I'm quite positive on Emphasis. I think this is a stock which is owned, the pedigree is very strong. It's a Hewlett-Packard company. After HP took over EDS and EDS took over Emphasis. They are very strong in applications management. They are very strong in the ITO segment. And this has been one company which has been the fastest grower in the IT space and has also been very consistent. They have a robust balance sheet. Their recent takeover of AIG systems also fills in the gap in the overall product basket. The valuations are cheap for a company that has been consistently growing at about 20-25% of the top line and something similar on the bottom line for over the last 3 to 4 years. I think quoting at 12.5-13 times FI11, it's quoting pretty cheap. So I would definitely go in for it.
Your other stock picks are Tata Steel, Usha Martin, TRF. Could you run us through those? Yeah.
Okay. TRF, that's a company again owned by the Tatas. It was early called Tata Robbins Fraser. They are into bulk material handling systems. They are also into the core infrastructure space. And they have a clean balance sheet, order book position of 1,400 crores, which is almost 2 times the current turnover. So the visibility is pretty good, and with the economy picking up, a lot of emphasis on the infrastructure side, I think this is a stock to watch out. Do I expect a growth of at least, say, 30% CAGR over the next 3 years? The answer is definitely yes. Available at just about 7.5 times on FI11, I think it's a great buy. Tata Steel, it's more about chorus rather than Tata Steel. Yeah, locally they have been doing relatively well, looking at the robust economy, the local economy. But on a consolidated basis, they were suffering because chorus always operates on a high operating leverage. So my sense is, as Western economies turn up, especially Europe turns up, we should see capacity utilizations in Tata Steel, especially chorus picking up, and that should really impact beneficially the operating margins at chorus. So on a consolidated basis, I think the swing in profits could be very, very spectacular. So I'm quite positive on Tata Steel. As far as Usha Martin is concerned, I think this is a company which is the largest wire rope manufacturing company in the world. They are fully integrated right from iron ore up to the wire rope stage. They make steel, they also generate power, and they have weathered the storm very successfully in the last year. And they had a 2,100 crore capital expenditure plan. A large part of it is already behind them. So I think it's always a good idea to do capital expenditure when the chips are down. And when the economies turn up, you start benefiting out of it. So I think Usha Martin is all set for capitalizing on the capital expenditure. Available at just about 3.5 times FI11 for a possible growth of almost 60 to 70%. I think the stock is going very cheap.
Paras, one last question. I don't know if you already spoke about this one or no, but I was reading Manjushree Technopack. Why do you like this stock, and how far can it go?
Yeah, it's a kind of an exception to the other stocks that I've already spoken about. This is a company which is, if I may use the word, ancillary to the FMCG and pharmaceutical industry, and also caters to the food processing industry. These guys have more than doubled their capacities again at a time when the chips are down. They've increased the capacities from almost 9,000 tons to about 21,000 tons in the last 1 year at a very, very economical cost. So they have a market share of close to about 20% plus in the packaging segment, especially the PET bottles. They cater to companies like Smith Line Bisham, Nestle, Procter & Gamble. So you name them, and they are already there. And if you look at the quality of balance sheet, it's the debt equity is less than 0.5. The return on capital employed is in excess of 25%. So I think they're all set for growing the company at a clip of at least 30% over the next 2 to 3 years with a balance sheet which is very healthy. For FY11 basis, I think the company is available at just about between 2.5 to 3 times. You just can't go wrong on the company. On a price to book basis, it's half of what it should be quoting at. It's at about 0.4, 0.5 times. So I think be it growth, be it valuation, be it the quality of promoters, be it the quality of balance sheet, I think the stock is looking pretty good.
Fair enough. Gentlemen, many thanks for joining us and taking through your views on the markets and those stock specific calls. Viewers would definitely benefit.